Hi, welcome to this video day, 21st of August. It is Sunday. In today's video, we're going to look at trading really big fundamentals that drive big trends. Now, in relation to this, I want to look at what we consider to be really good risk-reward trade setups in terms of the USD against commodity currencies. Now, in terms of pairs I want to look at, they're going to be AUD USD, USD CAD, NZD USD, USD ZAR, and USD MXN. We'll go over to the charts in just a moment. Now, for us, commodity currencies have shown some weakness against the USD over the last week or so, but far more weakness to come. Global economy is slowing. China, in particular, the world's biggest commodity consumer, huge problems in the economy internally. Commodity prices, in our view, are going lower. That will take the commodity currencies down. Also, you've got the potential for risk off, which is bearish of the commodity currencies. And finally, interest rate expectations for all commodity currencies have peaked. In our view, far lower prices could be on the cards. Right, now, in terms of looking at all the trade setups, let's do that right now. But just before we do, always please do keep in mind, it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want to learn all our trading techniques and our strategy, and also check out our daily technical sentiment analysis of 14 FX pairs, go to the link beneath this video and you can get live access to our member centre. You can also join our Facebook group of traders and follow our Facebook page if you wish as well. Right, let's take a look at the trade setups. A chart of AUD USD monthly. Now I'm just showing the monthly chart here so you can see my targets. Okay, you can't see them on the daily chart. Now, in terms of AUD, we're just sitting below the 69 level. And I'm now looking for an acceleration to the downside to go to 65. So here, and then the base of the green candle at 60. And this is where basically the 60 level, where you had huge central bank stimulus in relation to COVID. And the Fed did the biggest of all in terms of money printing. That money printing more dollars in circulation, so the risk currencies could rally, including obviously the AUD. But this wasn't against the background of really expanding global growth, was it? Now, the Fed have stopped stimulus and are taking those dollars out of circulation. The dollar has pushed the AUD down. I think we should get back to 60, where the big stimulus really kicked in. And if we think back to 2019, the global economy was doing far better than it is now. So I think that's a realistic target. Now, in terms of, it's not looking good for commodities and commodity currencies at all. Just want to show some general charts in relation to this. Then we're going to go through all the levels of entry, stop, and target. First chart is the US dollar smile. I've shown this in my previous video when I was updating the commodity currencies, but it's very important to keep it in mind because in a US recession or a synchronized global slowdown, the dollar appreciates. Okay, now debate of whether we may get a US recession, but we've certainly got a global slow up with China really slowing up quickly. Now, in terms of why the dollar tends to do well in a global slow up, think about this: 80% of loans granted in the global economy are in USD. Less loans are granted when you get a slow up, so that's less dollars being sold for other currencies. Also, dollars go back, or they're called in by banks, which means you have to convert whatever currency it is to USD, so buy US dollars. Okay, you've got interest rates going up in the US, making loans more expensive, which again limits the amount of loans going out. And finally, I mentioned it earlier, you've got the Federal Reserve reducing their balance sheet and taking dollars out of circulation. Now, in terms of the global slow up, is it going to turn around anytime soon? No. I've done charts of the global slow up in other videos, so I won't do them here. It's just not going to turn around anytime soon. That means the dollar is going up, and in terms of when you get a global slow up, it's the commodity currencies that tend to be the most vulnerable. Now, I just want to look at some charts generally in relation to commodities, how high they are, how far they could fall, and how that will pressure commodity currencies generally. So we'll just take a look at those charts, and then we're going to do the levels of entry, stop, and target. A few commodities. All commodities are just overpriced. They've got a long way to go on the downside, which will pressure the commodity currencies. Now, this is crude oil. massive rally up to above 120. We're back below 100. Where could we go? We could go to 60, maybe even 40. Global economy is in worse shape than back in 2019 when we were around the 60 level. I think we should get to there, then on to 40. In terms of demand, this is a chart of US gasoline, okay? 2019, there was the demand. Look where we are today, okay? Demand is weak and it's going to weaken further, okay? Global economy slowing up, less demand for crude. And yeah, people talk about supply being tight because of the Russia-Ukraine conflict. No, because most of that oil is finding its way into the global market anyway. Okay, so crude, a long way to go on the downside. Some more charts of crude on this one here. This is Chinese demand for crude. Since I posted this chart, we're a little bit lower, down towards the bottom of the red square. It's going to go a lot lower. Okay. Chart that basically indicates the health of the global economy. It's a monthly chart again of copper. It's nicknamed Dr. Copper due to its wide usage in the global economy. And you can see again a big fall. Okay, we had a tail exhaustion there with blue. This rally won't last. We should go to 3,000, then 2,000. You look at just commodities generally, they overpriced and are going lower. Okay, just two examples. You want to watch this pair, which is USD Chinese yuan. USD is coming up on the yuan and we've just broken out above the 680 level. Why is that important? Because the People's Bank of China know that the internal economy is not doing well. They want a lower yuan to boost exports. They'll sacrifice the fact they're making imports more expensive for commodities. Okay. So yes, it's not looking good for the commodity currencies. I think I just said a few times. Sorry. Watch this chart, see if we accelerate to the upside. Now, just want to go to interest rate expectations. If we look at the AUD, NZD, and CAD, the market views those central banks as being the most hawkish. We think they're too optimistic, and that interest rate expectations will not be met. We also think that the market is underestimating how quickly and how high the Fed might push rates. Again, bullish for the USD. Last chart, which is the stock market. Stock market, if it falls, that'll be bullish for the USD and send the commodity currencies lower. You had Fed stimulus help power a rally of 100% to all-time highs. We roll over to the downside. That is a correction of oversold. We're at major resistance. If we start to break down, then that'll help the USD. And I think we'll go to 3.2, maybe even 2.8. Okay. So yeah, they're the big bullish fundamentals behind the USD in our view. Right, let's look at entry levels, stops and targets. AUD USD first. USD daily chart. For anyone new to our videos, our technicals are very simple. We've already got a view from the big fundamentals and sentiment behind the chart. So we just want to focus on big levels and keep it simple. Now, in terms, this rally here, it ran a little bit further than we expected, actually. We got above 70. We thought the rally would end in the 70 level. We got above 71 here. We just sold back. You can see my level 70.90 through round number. Round number is always important. And yeah, we've got some nice reds. The downside, a couple of hundred pips so far. Hopefully far more to come. You've already seen target on the monthly chart. How would you play it if you wanted to come in? Well, if we did rally back above 69, I haven't drawn the level in, but round numbers, always say they're important. Just sell back through the round number or look for weakness into the 70 level. If we don't rally, you could always sell and look to see if we follow through to the downside. If we started to accelerate towards the 68 level, I'd bring my stop in probably behind this tail here. Okay, at the moment it's back at 70.20. Okay, just plenty of downside in our view. Australia is the most correlated country with the health of the Chinese economy, so hopefully plenty of downside. Next chart is going to be USD CAD. Where's USD CAD? Here it is. Now, in terms of USD CAD, I need to look at the monthly chart. Kind of come up in a choppy fashion. We're just below the 130 level. We're looking, if we get above 130, 135, so basically over here to this resistance zone, and then possibly back up to April 2020 highs at 140. Okay, so plenty of upside, potentially 1,000 pips if our view is correct. Now we have started to move up. My own view on this one, if you want to come in, you go above 130 and then look for an acceleration to the upside. This level here I expect to break, then 135, and I will be extending my target to 140. If we dip back to here, come off that level, the stop will be behind the 129 level. You can see my entry and stop there is a couple of hundred pips so far. Hopefully far more to come. We're expecting crude oil to get a really big hit, so we'll see. Next one is going to be NZD USD, again very correlated with what's going on in China. Again, this rally ran on a bit further than we expected, but we just sold back through the round number 64. Some nice candles downside, again around 200 pips. How would you play this one? If you open below 62, I would sell. If you go up through 62, wait for a move back through the level. At the moment, my stop is at 63.50, but I'm going to bring that in to 63.20. Yeah, good downside again to 60, then 55. Let me show you the monthly chart. NZD USD. It's been moving nicely lower. This level here is going to come into play in our view, and then we're going to overshoot to 55 where we had the bottom back in 2009. Where am I going to go next? Let's have a look. USD MXN. This is the daily chart. Let me just quickly flick over to the monthly chart. Now, in terms of the price action, fairly scrappy and sideways. We're looking for a move up to 22. This is a fast-moving, volatile pair. Okay, if we got up there, that would be a great result. And hopefully we get on even to 24. Now, in terms of the Mexican peso, it's a commodity currency, but it's also an emerging market. If you get a big global slow up, then the emerging markets tend to get hit hard. I think the Mexican peso has done relatively well at the moment. You had the big fall here. Dollars fought its way back. You can see our entry just above the 20 level and a stop tight behind entry. If I was doing this one fresh, wait for a move back above this high here, then it should be up to here, then off the top of my computer screen. And I think you could put your stop if you're coming in on strength through here behind first level resistance. Okay, so that's what buy on strength in our view. You could buy the dip if you wanted to as well. I think the 20 level will hold. Now, in terms of USD ZAR, South Africa again is heavily correlated with China. Dollar, nice move to the upside. How would you play this one? My own view is if we go through this high here, you could probably have a stop behind first level support. If we were to come back to this level, you could come off it. If you went through it, you could buy through it, stop behind this double trend line here. Plenty of upside in this one to 1850, then 19. So really good risk reward, obviously, if our view is correct. USD ZAR. This is the monthly chart. So come up okay, looking really for a move up towards chart highs. Now, in terms of what we face in the global economy, I just don't see anything good coming in the short term at all. So I feel, with the big global slump, you've got the potential for big falls in commodities, stock markets to crash lower. That's just basically bullish the USD. So we'll see how these pairs go. But that is the video for now. Hope you found it useful and thank you for watching.